All right, recording is rolling. All right, so thanks for joining, Don. We'll probably get maybe one or two, maybe a little bit later. We'll see. So what we're going to do here is we're going to talk just not like quick, but try have an abbreviated, have some sort of abbreviated, discussion about the indexes. We're kind of, I feel like we're just kind of midpoint right now, and Don, as you mentioned, it's kind of a muddle. So I don't want to be, I don't want to spend a ton of time on something that we're not quite sure how it's going to resolve. So, I mean, sometimes you have good good setups, sometimes you have bad setups. But I think probably we'll just start out here with the report card from last week. So last week we spent a lot of time like looking at the looking at the looking at the Nasdaq here, and at that time we were kind of thinking like, okay, well maybe maybe we'll see like the bullish case was like a ABC up. Well, ended up being so instead of a viable dip, ended up being here. Let me zoom in. It ended up being like a gap down. So it kind of felt like it was going to be a little weird with that. But anyways, like this is the bullish case didn't materialize, as you know. It's like my stupid dogs are fighting in the background. But anyways, so what ended up happening here was we had a gap, and I kind of think that this is the beginning of. Let me add some contrast here. So I'll start out with like the bear scenario first, and then I'll show you guys like what the potential bullish setup would be. It's actually kind of the same juncture we were at last Wednesday. So I think it's kind of funny. It's like you look at the same same price range, same sort of thing, but now I think we're making it actually like a bigger sort of B wave. So the first wave down, as you can see here, so just so we can kind of level set, looking at the larger structure, at this time it kind of looks like we got a double top. We had a line here like this. It's kind of like the bifurcation level. I have another one of those in the S&P. I'll do that in a short minute, but pretty much what we're looking at is like we have this first leg down here, which you can see has a couple of these ABCs in it, and there's actually a 5-wave down here for this last D leg. So that's actually kind of what I'm thinking we might see here. I kind of thought that this was maybe like our first A wave down, and then this rally here looks a little bit more like a B wave. So kind of looks like this. Now, of course, nothing is certain, of course, but I think that this is, I would say, probably like a 65% chance here that we're going to get a little bit more selling. I mean, there's just a lot of geopolitical stuff going on right now. There's a lot of uncertainty. Oil is definitely driving indexes up or down. There's a lot of surprises and things. So the volatility here is really driving the VIX up. And we've had a couple of like a day and a half here of volatility crushing, but I still think it's actually a good time to load up in some more puts, or whatever your choice of hedging is. With futures down, not too much. I mean, last Wednesday when we were talking about it, when we started the call, it was it was down probably 15%, maybe about the same amount. But in this particular situation, or like in last Wednesday, it ended up like climbing back up, a bit until the end of the call. It was already positive in the green, but it's still kind of gives you a little bit of sense of the sellers are trying to dominate the session right at the open here, or at least like the international sessions. So just to kind of keep it clean here, I think that once this, well, if these levels break here, I'll zoom in a little bit. If these levels break, then it kind of looks like you might see some more sliding down here. And let's do some measurements. Because this also kind of dovetails into the same into the opposite scenario, like the bullish scenario. So just looking at this in general. Oops, sorry, 1 second. Okay, and I'm back. All right. So I think what we're going to be looking for here is at least like some sort of, so here you already saw kind of the bearish case, but for a bullish case, I think you could see something like this would be a setup. But this level of resistance, I think, is a little too strong to see. It may be a little bit higher. So like if you drew a trend line, you might make the argument that this is like a consolidation zone here for how do you say it? Like a consolidation zone that needs to either break up or break down. So my opinion, it's like if you get higher than this, you get higher than 25,400, then most likely you're going to see some sort of attempt to kind of keep breaking through. But overall, you're starting to see some higher volume here. And again, as of last week, something happened with this ticker where the historical volume is kind of chunky. So let me show you guys Nasdaq. Yeah, so the Nasdaq you can kind of see is kind of on this decline a little bit, where you've got this like the days where you have to buy candles, you can see that selling outweighs a lot of that stuff. However, there is still like a positive positive buying profile. But if you kind of zoom in here, I mean normally futures has a little bit more of a positive buying profile, just because it's the opposite end of the cash session, which is typically sell heavy with these sort of zones. However, I guess when you go back here and you look at this bullish setup, I think that it depends on where it gets stopped. So if you see something like this, well, there's actually a pretty big dip. But if you see something kind of like this, sure, I could see like that looks pretty symmetrical. Like I bet you that's kind of like A equals C there. I think it's certainly plausible. I wouldn't really give it a 50-50 chance. I'd say it's probably a little bit more like a 65-35 sort of thing, bearish, just because of, again, a lot of this stuff is news headline driven. But I'll pull back here to like the 0.5, so this 24,600 level, and if that gets sold through, highly likely you'll see something like this, where you'll get a big attempt here to kind of buy the dip, and bulls want to show strength. So if you try to save that right above the 200 daily moving average, then that at least shows that bulls are showing back up again and wanting to buy. I mean, who's buying this slop right now? I don't know, but like, well, I just go ahead.
You got all these zero DTE people that aren't worried about tomorrow.
That's right.
And they've won so many times. I guess they figure if they take one loss, what's the difference?
Right. Yeah.
Or so they're going to keep doing it until they're proven wrong.
Yeah, and the losses are limited, so it's not like futures.
Zero DTE,
Right. It's not like futures where you have unlimited losses. With zero DTE, like let's say you're all in. Let's say you do 10% of your portfolio, and you get a 1% move in the direction you want. I mean, you've just literally like doubled your portfolio. So I mean, that's it's the power of leverage, but it's also, if it goes opposite, opposite what you don't want, then you're kind of screwed. So that's kind of the kind of the bullish setup here, and it's plausible just because bad news equals good news sometimes in the markets, and people try to be counterintuitive, but I think overall I'm still leaning a little bit bearish, and I hate to say that because I feel like I always say that, but to me this looks like an incomplete C leg, and I think that we have yet to see an actually like powerful sort of C leg. So I guess technically, we have seen a couple, these ABCs, and I guess technically, like around the backside of this corrective wave, you could also make the case too that it's the start of a new, bullish trend upwards, but it still doesn't look like a real truncated sort of, nor the environment, like the political environment here to have some sort of truncated bullish, sort of buy up here of a bearish pattern. And what I mean by that is, if you kind of look at this thing overall, we have to keep moving down this trend line. If you remember, it's like, oh yeah, here we go, and then it failed again, and then we had to reset it, and then it broke through again, and then same thing with a couple days ago. So now we're at the same point where this trend line keeps getting lower and lower. And from like a charting perspective, once you start to see something like this, where you have like this megaphone pattern, that is just inherently a bearish pattern. Now, there's no reason why you couldn't see, let's say you get a pretty deep cut, and then you get a recovery like this, and then it fails to make a new high. That I could see. I think it's possible. I don't think it's. I mean, from a timing perspective, I mean, you're probably looking at something more like late or like mid to late spring, like into May. But I still think that we'll see this, another test of this 200. I don't feel like this buy up was super strong until like the next morning. So that's kind of the Nasdaq here. I'll just flip real quick to the S&P. And again, this was what we were looking at last week. So let me do this here. Yeah, so if you kind of notice here, it's like we're starting to get to the point where we have just these like diminishing returns. Like every time we have these rallies, they kind of fizzle out after a day or two, and that's just not a signal of strength. Like take off all these other lines and things that we had before. You can kind of see this. It's got this rounded top pattern, which is definitely not bullish. I mean, because it could also be you could see here. Let me draw it here, because it's possible you could see this sort of pattern where, let's say you get that bullish sort of dip and then a buy up like this. You could see more distribution, but ultimately that would be like an inverted cup and handle, and that would be a bearish pattern. I kind of think that like there's been enough distribution that these guys could definitely keep it up here for another month, and you could also see something. So like that's one scenario, but again, it's kind of short term, very, very short term bearish, but then not as short term bullish, to kind of head back up here to the 6850s again. But another thing that I'm keeping my eye on here, especially if we don't make a new low, let me get these lines out of here. So if we don't make a new low, then I think you could probably see, let's say, a dip down, and then you could see, maybe like a creep up here, and then consolidate for a bit, and then head back down. But that would also make like a head and shoulders pattern. I mean, I don't really think that's where it's going right now. I kind of think it's more like if we were to see a bullish continuation higher, which is possible. It's been a pretty long bull run here. All it takes is 2 or 3 days of bulls just deploying infinite capital to disturb all the shorts. But we're already starting to see some sort of expansion here where it just gets wider and wider. And again, that is a bearish sort of development. So before, when we had trend lines like this, where it was kind of pointing upwards, that's still an ending diagonal. But as you get a little bit lower, as the lower trend line keeps getting broken, and the retests don't really survive very long after that, then you got to start to think about, like what might be like your retracement levels. Maybe this pattern is getting pretty well. Not maybe this pattern is getting pretty old. So I do think that at minimum here you'll see some sort of. It might be tomorrow, the next day, maybe early next week, not sure, but you'll get some sort of retracement back to where, there were some sellers that were, kind of trapped down here, because a lot of this movement happened during after hours, during futures, and it just got bought up and then continued the next day. And I kind of think that was by design. It's like you want to test, or sellers always want to test that key level support, because there are investors out there that will just, they only buy when it's above the 200, daily moving average, and then below, or sell below, that kind of thing. So, a lot of those like larger institutional positions, is kind of like a test of, like how much capital these guys going to deploy to keep the market supported. So anyways, like there's a case for both, but I still think that the more and more you kind of dip down here and start to accumulate, it's really just bulls trying to keep the dream alive here, while bears just keep selling at a strength. So even if we do get another run up like this, let's say we get a dip like a B wave and then do a C, I still think that'll make the backside even deeper and more drastic. So it's kind of like unless we see a clear above, let's just say like your next for this whole range here, it's like 69.25, that kind of thing. If we get anything much higher than that, I think then you could consider it pretty bullish, because then it would sort of invalidate your head and shoulders pattern. That would get a lot of short sellers to close positions and stuff if they're in indexes. But also, one other thing I want to note just before we move on to something else is I kind of mentioned that the futures profile has a lot of positive sell delta. Well, cash session has a lot of higher sell delta, and this level right here, and you could see today at the 68.30 level. Just want to point it out here because there are a lot of day traders in the service. So one thing I wanted to just flag here is that you have two high volume tests from the bulls to spike it, and that is the exact same research that the sellers were doing on Sunday night. So this is their test to see what what the sell pressure is going to be at higher levels. So you can see all these top wicks, and the top wicks here, like this one, it just comes out of nowhere, right? Well, it's red just because, it's red with a top wick because whatever the bulls tried to buy up and squeeze shorts just got shut down right away. So same thing with this morning. They kind of let them buy it up at ABC here, then they shut it down and just gradually kind of sold it down throughout the day. But what's interesting is when you see something like this, when you have like a big just random couple of minutes where you get a lot of high volume. This is also the test buy support. So I'm kind of thinking that you might see, like with futures here, you might see a bit of a recovery, but then you might see a little bit more downward pressure here as the night moves on. So with that being said, that's kind of it for indexes. Let's see here. Any questions about those before I flip to other stuff? Okay.
You can keep on moving.
All right, keep on moving. So what's interesting, so let's flip to the yield. Hold on a second. I gotta. I was very tempted to grab a Capri Sun from one of my kids, but who am I kidding? I actually did. Nothing else in the fridge to drink. I blame my wife. She's within earshot. She's gonna strangle me. Maybe tonight. You never know when it's their time to attack. Okay, so what I find really interesting is how fast the yield has bounced back from its low. Today, with some of the inflation data, we had just flat to forecast, no surprises, either under or over. And I wonder if that's kind of by design. I mean, I know that the data is trusted, but you never know with what's going on these days. I try to be a little skeptical just because if you believe everything that you're told and you don't really research it, you're kind of doing yourself a disservice. We're trust is something that's earned, in my opinion, and not necessarily given. So with that being said, it's like, is inflation actually fading away, or is it getting stronger? We'll find out in hindsight, of course. But I think that a good thing to watch here is bond traders. So bond traders, in my opinion, they're the best in the business. They deal with a lot more higher dollar amounts than equity traders do. The bond market's 10x the size of equities. But I kind of think here that oil is really the thing that's driving this up, because bond traders are thinking, okay, we have tightness of oil supply that's going to drive up inflation because oil's in everything, plastics, all sorts of crap like that. And with this sort of K-shape economy thing that's going on, it's like people don't have a lot of disposable income. So personal experience, groceries are expensive. There are some things where you can see prices have come down, but overall, I still think that yields are going up because there's just going to be more inflation coming up here if oil prices do stay elevated. And I really don't think that there's going to be I just don't think that 8 days, that's it. There's I mean, how many people does Iran have? Like 80 million people, something like that. Like, you know, could be a quagmire. Anything Middle East related is a quagmire. So you can't just drop a bunch of bombs and walk away. You know, you have to ensure regime change. You know, like there's always going to be these little fringe things. So I think there's going to be escalated tensions there for a while, and I think that's what you're seeing here with the yield with bond traders. You know, thinking that there's going to be more inflation just because of the, you know, price of oil and gas and stuff is just going to drive up. You know, just pass the costs along to all the consumers like normal. So how does that impact gold and silver? I think, and you know, I might get your opinion on this here, Don, but what I was kind of thinking here with gold is that, you know, gold had this just monster run, and then I think a lot of people got, you know, sucked in and trapped, and they lost a lot of money on gold with this big, you know, this big sell-off. Same thing with silver. So if we're looking at like the, you know, the silver chart, it's got the same sort of concept where, you know, to be fair though, like there is a bullish path where you could see, you know, much higher. Like this could be just a B wave that we're seeing now, and then it could head higher and then head lower.
I mean, silver had an ABC pullback, so
yeah,
who knows? You could make a case either way for the future.
Yes. So I think what you could see, sorry, spit it out here, is you could see some sort of like pattern expansion like this, where you don't necessarily see like a big huge drop, but you just see a little bit more bearishness, and then you see like kind of like a relief rally that pushes it, you know, a little bit higher, and then it kind of finishes this pattern out here. But that's, in my opinion, a longer term sort of B wave top. So what I mean by that, for folks following at home, is something like this. I mean, it's a huge drop, but if you think about it, that just really takes us back to where we launched, you know, back in October. So it's really not that big of a deal, you know. I mean, it is if, you know, we're kind of stuck at the top, but you know, but I guess, like, long story short here is that I think that there's just weakness in metals at the moment, and I think crypto is the one that's benefiting the most, because crypto
is looking very interesting right now.
Yeah. So I guess to kind of wrap up the metals, it's like, you know, you could see something like this. I mean, having like, you know, huge massive corrections, I think is like over so far, or not. What am I trying to say? I think that like having a huge sort of pullback is, I mean, you still do see a decent amount of buying here. You know, people kind of buying into the dip here, but I still think that this is like a, you know, kind of like a suckers rally, and you can also see the volume here is declining significantly. So I'd say, like, you know, if you're planning on shorting metals or something like that, you know, you could do it through, you know, some ETFs, or, you know, like Dust, where it's like the miners inverse. I've had some poor experience with Dust before, so I don't want to pick it up. I would rather do like GLD puts or something like that, something where it's
I would only do the puts because this thing could go anywhere, any place. So
yeah.
I mean, I just got out of a put because I thought we might have made a little low this afternoon.
Yeah.
And I have one long on, that's it. But I don't want to get, I mean, my big position is still in the miners, which are acting totally ridiculous lately.
Yeah.
I mean, they're up 2 points one day and down a point and a half the next day, and it's like, like the whipsaw and the amount of movement is just crazy.
Yeah, it's very, very difficult to it's very difficult to like stay in a position with something that's moving so fast. Like, for example, you know, I do trade futures on occasion. Normally it's like a fun money account. It's more like puts, calls, that kind of thing. But you know, like if in a bull market, you don't want to be holding puts for far too long. You'll overstay your welcome, and, you know, you can get squeezed, and, you know, so like you can go get a cup of coffee, come back, and come away from a winning position to a losing position. But at least with the puts, you are, your loss is defined. So if, you know, you paid $1,000 for a, 2-week put or 30-day put or something like that on GLD, the most you'll lose is $1,000 and some pride and maybe some tears, but but
and you can do a spread too. I mean,
you can do a spread, absolutely, yes.
With the volatility so high, you can get a decent premium for something far out.
I agree. And another thing that people don't really do that I think is a pretty nice moneymaker is when you do take out a spread. So let's say you're kind of at this juncture where you're like right in the middle of the chart. And you're thinking, okay, well, it could either go up or go down, right? So like if we're again, if we're looking at the indexes here, like I'll just pull up the Nasdaq here. So let's say you've got your high side and your low side. So let's say you bought a put, then you sold a put down here, and what you could do is, excuse me, you could let's say you get this little dip. You don't necessarily have to close the spread, but you probably should take profits or whatever, because then that's a successful spread trade. However, if now you get some sort of, let's say you get a bounce at the point of control and you head back up here, well, that put that you sold is probably going to be crushed at least 50%, if not more. So then you can buy back the put that you sold, and then you can resell another one a little higher up, and you can still kind of cancel out those losses, but it just takes a lot of active management for that to to be able to pull it off. But it's still, I think, a pretty good moneymaker. Okay, so that's kind of metals. I don't want to just go ahead and say, oh, it's going to sell, it's going to be bearish. But once you see declining volume like this, you kind of, especially like with gold, and also you start to see some, higher volume sells at some of these different peaks. To me, that's like, everybody who had been trapped higher up, who was playing the blow off top game, they've pretty much got their money out already, and now they're going to try to do it again. It's kind of funny because sometimes, it's like things come in threes. Well, in markets, I think things just come in pairs. So like if you see the same move 2 nights in a row, odds are you're not going to see it the 3rd night in a row. Same thing with chart patterns. So if you see one dip that has a decent amount of volume, decent amount of buy volume, highly likely if you're in any shorts, get out. It's the same thing with calls or whatever, or shares. If you see something like this, where you see declining volume, and also you see on the larger time frame, you start to see, oh well, some people look like they're catching the knife here. Well, that just, to me, that just says gold's a little high for right now. The market's not really supporting higher prices well, so it's kind of a signal to maybe wrap up some longs, or just sit back and wait for a drop. And if you don't like to short, sit back, wait for a drop, and then get back in. All right, so let's look at oil. Oh, sorry. Before I do that, do you have any questions? Follow up for metals?
No question.
All right.
No answers, no questions.
No answers, no questions. That's right. So I think so as we've been kind of talking about this stuff here, you kind of see futures are dropping a little bit. I don't I'll believe it when I see it. Let's say you wake up tomorrow to a 2% down kind of thing. It could definitely happen. Again, I do think that we are either soon to start the sea leg down here for the back half of this correction, or maybe it's already here. It's just we saw like a B wave today, or maybe a wave 2. So for you Elliott fans, but so if things kind of if we do see a pretty strong retracement here in oil, so let's say we get some more bad news overnight, and some ships were attacked today, that kind of thing. I kind of think what you saw today was some distribution with here, if I go back to the Nasdaq, this to me kind of looks like a double top again, where it just kind of slides. We actually kind of saw the same thing last Wednesday, where we saw a buy up, like a retrace, like we kind of saw this morning, and then it just kind of faded away throughout the night. And then when you or when futures opened on Sunday, it was you had a big down day. So now that you start to see like now that we're starting to see these big drops here, well, not big drops, but well, it could turn into a big drop, I guess. I do think that this is definitely tied to oil. So the higher oil goes, I think that the deeper the cut there's going to be for indexes. And my opinion here, when you see the hour chart here for oil, you see there's a ton of buying here at this like 77 level. So to me, that's I think that's a pretty strong floor, or pretty strong indicator floor. So if you kind of zoom in a little bit here and let the volume profile catch up, look at all this buy volume down here. Like, to me, this is big support. So people are buying lots and lots of oil futures, just because people aren't stupid. They're especially like futures traders who put a lot of money on the line, a lot of risk on the line, where they're betting that there's going to be more conflict. And if you notice, this just happened right away when the market had opened. So to me, this is a sort of a planned attack on the markets, where you can kind of see this happen a lot, where futures now almost 0.5% now. When I make comments and stuff to the channel, it's like, hey guys, we've ended the day at the top. Maybe consider taking some profits or consider a hedge, that kind of thing. And once we get to MSTR and Bitcoin and stuff, we'll talk about that here in a second. But the odds are like a lot of these big moves happen at night, and then they impact markets right away. So you can definitely see the inverse covariance here with the indexes versus oil. So
I see we just broke over 90, so that's a breakout.
Yeah, looks like it, because today, that's right, today,
just this evening, I mean.
Yes, so we had a lot of, ever since here the 10th, well, it's really only been 2 days, I guess, but still, like, you can see the accumulation down here. So I think that people were buying all day. And even when you get this big spike here, like like a dip, and that was it 10 a.m.? Yeah, so it's about 1 o'clock Eastern time. Yeah, I mean, here it goes. You can just see it ripping up the space as we're chatting here. But I'm long oil, plus also long with oil here too. And now that we actually see some positive movement with natural gas, I think that now you might see it like a real takeoff. So I think your question this morning, like where you, or was that yesterday maybe, where do you see a bottom? I thought it kind of bottomed the other day, and now you're seeing a lot of accumulation here. Let me do a little quick volume profile, just for
we're up a few pennies.
There we go. Yeah, so define fixed range volume profile here. You can see that there's still a lot of buying at this level. Like, even though there's selling, like, this is still common of distribution. It's still common to see some bars here where you get some some sell delta, just because people have positions and they want to try to exit, plus they also want to accumulate. So it's like, even though you're buying, you still let the sellers sell into it, because you want to buy at lower levels, because you're going to spike it later. So another thing that jumps out at me too is that there's a 5-wave down here for natural gas. So you see a lot of this sort of thing, and that typically means that you're like mid pattern for something. So in my opinion, the next direction here looks like it's up, just because this is a really funny looking triangle. Like, again, I'm a big believer in symmetry when it comes to chart patterns and stuff, and I just think that this looks like a real ugly, contract adjusted sort of pattern here, and I just don't like it. But even if you adjust it for contract rolls and stuff like that, you still get the same sort of performance out of the short term chart. So I still think with the adjustment here, you can get some more movement here. And as also as we're talking here, you can kind of see oil's been still kind of trying to break this retracement, this like wave 4 up. And you can also kind of see that I think tonight, if you see a breakthrough of like the 50% level, which is what we just did, and it continues up higher, I think that's really the big test, because 50% is typically where you see like a pivot and then a turn, like a turn lower or something like that. But if you don't really see a pivot at those levels, then the move could either be impulsive, or it could be you can have just a little bit more wind at the back of the sails. And considering the the political climate, the backdrop here, I think that along for some of these here, for at least for like a retrace or like another rally to kind of go rescue some of these trapped positions, I think is more than reasonable. All right. Any other questions with
Well, that 50% on the oil is a good spot because fills the gap, refills that gap.
That's right.
What level? It's at 97 or what is that?
98. 98.14. Yeah, it's not super precise here. Let me tighten it up a bit. I mean, still yes, 98, like slightly above 98. But if you get a breach above, okay, so 98.20, and you're right, it's just right where that gap was.
Yeah.
I'll bet you they fill that gap tonight.
Mm-hmm.
And then maybe in the morning, you might get a retracement lower, but who knows? So I guess you kind of seeing it like unfold in real time. Kind of think like maybe tomorrow morning you might see like this gap close. Like you wake up to that, you get buying rally in the morning, and then you get more tensions throughout the next day or two, and that sets up the next week. So how does that translate to other indexes, other things? If you look at stocks, stocks actually, like, this is really interesting where you have a lot of sell delta up here, where this just does not look healthy right here. Like this is not really an accumulation zone. This is a distribution zone. So that's why I'm still sticking to my guns here with we're gonna see a lower low with stocks here. You can just kind of see it developing. I'll still stick with equities here. Equities like Nvidia, for example. This looks like a ABC up from the bottom here, but didn't get very far. So to me, that's like you'll see a continuation.
Nvidia is going to have a big move in one direction or the other.
Yes, yes, they are.
Because it's been going sideways since November.
yes, and if you've been following some of the different commentary and stuff, you can see like like A13. If you follow like the mark indicators, like A13, S9s, 9s, all this sort of stuff, that is just overbought. Those are sell signals, and I don't do the daily counts. I do the weekly because I feel like the weekly counts are a hell of a lot more reliable than the daily for projecting weakness or strength. So I think that Nvidia here is going to get its butt whooped. So like after earnings, it got sold down pretty good, but you also just got a dividend here, so people are probably probably buying in to get that. I don't know. It's probably the smallest dividend I've ever seen.
Can't be much.
It's not. Yeah, it can't be much, especially if you're buying a $186 share and you get a penny for it. Like, that sucks.
It's not AT&T.
Yeah, that's right. So flipping here to Tesla, I think Tesla's actually been surprisingly resilient. I actually kind of think you're going to see like maybe just another little test or like a small lower low, and then I think you'll probably see some sort of like a head and shoulders, move here. Because I mean, Tesla, to be fair, they're just like a huge organism of companies now. It used to be just cars and stuff, but they sell solar panels, they got batteries, like all this sort of stuff, and they're really they're really growing it. And I think that it's I think like I can't remember exactly what it's called, like personality investing or something like that, where like anything Elon Musk touches turns to gold. He's just an experienced businessman, which means
I've been building up a position on the long side.
Okay.
And if it goes lower, I'll buy some more because I think the next major move is up.
Yep, I agree. I think
if it goes back to 360, 380, that's a good spot to buy some more.
Yeah, and I'll do some more measurements on this chart here once I get there. But you also just saw a weekly buy signal fire too, so I think that
you could make a case that this is a low here, and it could move up to 440, 450 area.
Yes, you could. The only thing that I always try to keep in the back of my mind is like if indexes are falling, it's like all things rise and fall with the tide. So if you
So
do
it could get pushed. Everything could get, no matter how good it looks, it could get pushed down.
right, but I completely agree with you. I think that like the 375 level is a like a really good level. Even like if you got 360, that's a good buy. If you
Yeah.
got if you got anywhere close to this 356, I think that's a strong buy with Tesla in general. Even
Mhm.
though like longer term, it kind of looks like there's. I mean, I don't think this is it looks impulsive, and I mean it is, but uh, that could be like your fifth wave. And if you're coming from the bottom here, it's just it just looks like kind of an ugly chart. But they've had so many so many things happen to them. Like it's a very popular public company, so I know that it's just it hasn't had a lot of time to mature like index charts. Plus indexes are a little bit more calm compared to like single stocks, some single stocks. But anyways, I think that there's going to be some more accumulation down here. I think that things like Nvidia. I think like Nvidia just looks like it's getting tired and tapped out. I mean, you can kind of see all this distribution up here, and it hasn't really sure they generate cash, but you know how many GPUs can you buy before your shareholders get upset at you for
Mhm.
all the capex spending? We're already starting to see that. So I think the people that stimulated all that massive spending for like Nvidia and stuff, I think that capital is going to go elsewhere. There's just diminishing returns, right?
Yeah.
So
It's just such a dichotomy in the market. I mean, you have stocks that have gotten, I mean, big name stocks that have gotten totally destroyed.
yeah,
And then you have others that are at ridiculously high levels.
yes, and they remain there, and I think it's
I mean, look, Microsoft is down from 550 to 400. I
yeah, it's
mean,
crazy. It's crazy.
uh,
Um, Even saw
Amazon,
Intuit get hammered. I mean,
you
they're not
know,
like a massive company, but still, like you saw a lot of these, SaaS platform companies get hammered recently. And they're clawing back, but the concerns were founded. I mean, like I said, I saw somebody code or vibe code or whatever this thing from Claude that completely replaced
mhm.
was it Monday.com or whatever. Even though I don't think it's a bad stock. I just think that we got to focus more on like revenue, or like actual fundamentals, and I think that should be like a what you call more of a focus going forward about like how like what is a good buy and what is not. Uh, Plus also if they have like a economic moat kind of thing. Um,
Mhm.
so anyways, like that, I like the food producers. Everybody makes fun of me for it, but I don't care. you know, AI is not going to be able to grow a plant. They're just going to be able to you know do more memes on the internet. So anyways, I should probably wrap this up. So Bitcoin. So I think crypto's been pretty resilient, and I think that there has been a decent amount of accumulation down here. And if you look at something like MSTR, I mean, it's really just a microcosm of Bitcoin. Um,
Right.
and you can still see there's just been a ton of buying down here, but you also see some reversals. I was very happy that we caught that one up here at 149. It added some hedge here, but I think as flagged on the chart, this is the same thing with crypto too, where you could see some potential like pattern expansion. Um, I think that that would be like this last little wave down before you get a slightly higher high, and then you'll probably get another dump,
Mhm.
like maybe like a last little impulsive wave, and then I think you're good for a long time for crypto. I think it's had enough of a sell off where anything like you get down to 52,000 or even lower. You get lower than that. I think that'll spook a lot of people in crypto, and that'll just be a buying frenzy for institutions. They want to get back into the crypto market. When they all sold up here. So that's kind of my take on crypto here is that I think short term it's going to have a little more volatility and you'll probably have a little bit higher highs, but I would be prepared to buy the dip in size. If it gets down below, or like if it makes a lower low, that's when I would start to accumulate. Um, so that's kind of it. Any thoughts,
Well,
questions, concerns?
take a look at MSTU, see what the volume looks like,
This to you.
or MSTX. I think there's two of them.
Sure. 1 second here. Well, you know what? Maybe I'll stop the recording here for people. 1 second. Well, thanks for attending, but then I'll answer your question here in a second. I want to keep the recording a little shorter. Thanks.